So what about Britain? Again, look at the survey results. Does that look like a recession? The numbers of these PMI surveys for the UK, putting together the manufacturing and services surveys, which gives us a sample of about 1,300 businesses. Those numbers stay just above the 50 mark. I grant you the fourth quarter was not great, but if they end up revising those numbers upwards to 0 or to 0.1 or something like that, I would not be surprised. And January gets off to a flying start. The survey number comes in at 56. That is not consistent with a recession. If we get numbers that keep on in the mid-50s, I will confidently predict that this economy has not gone into recession, and that actually in the first quarter it's grown, not contracted. A bit early days yet. We'll be looking for the February results, which will come out on about March the 3rd. The problem for our economy, and indeed, in a sense, the problem is the squeeze on household incomes. And indeed, if we do go into recession, it's largely irrelevant. For ordinary people, it will make no difference. Ordinary people have been back in recession in any case since the back end of 2010. Because we got more inflation than most other countries. It's something that's not widely enough discussed among all the welter of economic stuff you read in the newspapers. Why did we get 5% inflation and no one else? We pay the same price for our oil. Lots of other countries hiked their rate of VAT like we did. Why did we get it worse? The fact that our inflation was 5%, our average earnings growth is 2%, meant that ordinary households up and down the country are worse off, and considerably worse off. Mervyn King, indeed, in a famous speech last year, reckoned it to be the worst squeeze on household income since the 1920s. That's what we're dealing with. And that is also going in tandem with the process, this very ugly word, of debt deleveraging. We've always known this recovery would be long and painful. It's nothing terribly surprising about what's happened so far. It was always going to be difficult. Households had got too much debt. The government had got too much debt. This economy will not grow properly until those debt burdens have been worked down. And if you remember nothing else of everything I say today, just remember that. Now, how long it's going to take us is a moot point. Look at where we were. You go back to 2007. Households in this country had debts equivalent to 160% of their annual disposable incomes, even more than America. You know, well, we know it all too well. If there was a world championship of shopping, we'd win the gold medal every time, wouldn't we? The Olympic Stadium is up and ready, but the shopping centre was still built first. We know where our priorities lie in this country. So we've been gradually working our debt burden down. It's now at 145%. Where does it have to go to? Answer, I don't know. It has to go back to 100% before people feel confident, and we keep going at the rate we are. It's going to take another 12 years. You won't fancy setting up high value-added farm shops under those circumstances, will you? I don't think it will take that long, actually. I don't know how long it will take. All I know is it's far better to be 4 years into the process than not having started it. We have made considerable progress. And the reason I don't think we're going to keep at it forever and a day is simply because we haven't seen the huge falls in house prices that they have in the likes of Ireland, Spain and America. Household balance sheets still look relatively solid on account of the fact that houses have pretty much held their value. They're not going up in the way we used to take for granted, but neither are they falling off a cliff. What we're now looking for is eventually that consumers recover some sort of confidence to spend. It won't be like the good old days, but it would be better than nothing. And it will happen once inflation comes down to the point at which it is roughly in line with earnings growth. That may even happen in the second half of this year. Then what we're looking for is this fabled rebalancing of the economy. Given that we are not going to be able to grow this economy in the way that we used to. We are not going to be able to do it off the flim-flam of retail therapy and buying and flogging houses, or of spending by the government on our behalf. But instead, we're going to have to do it from the virtuous sources of investment and exports. So the question is, why aren't businesses investing, and when are they going to start? You might hear it said that businesses can't get finance, they are short of cash. Well, whether they can get finances is possibly a moot point, especially down at the SME end of the market. They are not short of cash. We had problems in this economy with over-indebted households and over-indebted government that needed to deleverage. We did not have a problem of over-indebted companies, yet they decided to deleverage anyway. And what we now see is British companies with profitability that fell but is now recovering, sitting on an absolute veritable mountain of cash. Fixed investment is still running at depressed levels. The reason we are still so far below the 2008 pre-recession peak is because businesses haven't invested, which is usually how you get out of these recessions. And businesses, it's not because they're short of money, it's not because they haven't got the profits, they just don't want to do it. They don't feel confident. Now hopefully once that confidence returns, we will see a surge of business investment and a much better 2013. That's the prospect I can hold out to you if businesses then decide that things are sufficiently improved, that the climate is then ripe for investment. But without that investment, this will remain a very feeble recovery. The other source, of course, is exports. And here there is some good news. Exports actually made a decent positive contribution to our growth last year. The economy grew by less than 1%, but I tell you what, it would have been 0 or less had it not been for exports. It's taken us a long time to realise that we are more competitive because of our lower currency. It's taken us a long time to get ourselves in the habit of exporting. But we are beginning to do it, and we're beginning to see success. Exports last year to China worth more than 9 billion will surely top well more than top 10 billion this year. And the even better news is that scrap metal is no longer our biggest exports to China. You know, the stuff that used to be cubed up, you know, the signalling system off the Southwest trains. I commute into London that's been stolen twice in the last year and no doubt sent to China. That is no longer our biggest export. Our biggest export is cars. High-end luxury cars. If you remember the dog-eared state of our motor industry of the 1970s, would you have ever thought it possible? A country now that has a series of world-class motor manufacturers. And that cars is now our biggest export to India, thanks largely to one Indian-owned company. So, being optimistic, I think we will escape a double-dip recession. It will be close, and bear in mind it might take a long time for the statisticians to agree with me. We do have a problem with the second quarter because we're going to have an extra holiday, so nothing will get done at the start of June. But then the third quarter will be nice because all those Olympic tickets we bought last year will finally come into the numbers. Anyone who knows anything about accounting will understand why this is. The money, it gets attributed to the national accounts when you actually consume the service. So when the Olympics are on, the economy will grow more strongly, not necessarily because of the Olympics, but simply because of the money that was spent last year to buy the tickets. And then hopefully the scene will be set for a gradual recovery with confidence returning. Households feeling a bit more willing to spend now that their incomes are no longer being eroded by high inflation, and businesses that feel more confident to invest, and exporters feeling more able to export now that with the shadow of the debt crisis at least partially lifted. Two interesting points off this one. No matter what happens, this will be the longest economic downturn in this country since at least the First World War. We are nearly 4% below the pre-recession peak. If we don't get it back by April, it will be the longest. Any chance of that? Not a hope. Next year, not a hope. Year after, just possible. So it's going to be at least 6 years. Easily the longest downturn. But all that really tells you is that all this stuff that economists talk to you about GDP is only part of the story. It doesn't really tell you about the real world. Is this honestly as bad as the mid-70s when there was hardly a recession at all? Is it anything like as bad as the Thatcher recession of the early 80s, which laid waste to the manufacturing heartlands of northern England? Is it anything like as bad as the yuppie boom and bust of the early 90s that laid waste to southern England? What matters is not what happens to your GDP. What matters is what happens to jobs, whether people lose their houses and whether people lose their businesses. And on all counts, this is nothing like as bad as either of those three previous episodes. It's not great. It's not a bed of roses. I wouldn't have wished this on us. But the fact that we have very low interest rates is an enormous benefit. So, cheap money, yes, for some time to come. The Bank of England will be very wary about putting interest rates up too soon. There's nasty history for those that have gone too soon with rate rises. There's also nasty history with those who've left it too long. The Japanese in about year 2000 are a good example of the former, the Americans in about 2004 of the latter. Timing is going to be crucial. But I think they will be waiting to see a recovery that is well established, and I think that will be well into next year before we start to see the first move up in interest rates. Euro recovery story, that may seem a bit odd. But the big question is really, why has this currency not been completely floored by the debt crisis? Why is it that even when the first Greek rescue was done and the Irish rescue, it only fell to 120? Why it never moved the jot when Portugal was rescued and only went down to 120 again when all the Greek stuff blew up? It's because ultimately in a world of imbalances that have caused us so much trouble, the euro is in some senses a sea of stability. The euro area may have all sorts of internal tensions, but the euro area does not run a current account deficit. It's in balance. And for all the Greek and Spanish and Italian bonds that may have been dumped in the last 6 months, a fair amount of that money has simply ended up in Austria or Germany or the Netherlands. It's just gone to other parts of the Eurozone. So, hopefully it's the start of the recovery, but it is going to be tough. We will, for this year and next, be fairly dependent on what happens in these still fast emerging economies of the East. Economies that have slowed, they needed to slow, most of them got too much inflation. But just again, think how lucky we are that these are now with us, and what this crisis would have been like without them. What this would have been like for your parents and grandparents in the 70s and back in the 30s without these large emerging economies. Without these safety valves and escape routes for British businesses. We still think that the large emerging economies are going to manage growth rates of 6, 7, 8% this year. That's quite amazing. It still gives us an awful lot for exporters to go out, still gives us a decent chance of rebalancing our economy, still gives reasons for British companies to invest. Obviously for farmers, what really interests you is what happens to commodity prices. To some extent, that's driven by the global economy. And simply because of what has happened in the last few months, it already looks like we're going to get higher oil prices. It's very difficult to disentangle the geopolitics. I do not think that left to its own devices, oil will be back at $140, $150. A strengthening global economy, I think, could well give us 120, but I don't think it gives us 150. The geopolitics could. And the geopolitics, of course, is completely unpredictable. And the fly that puts in the ointment is that higher oil prices, another uptick, it prolongs the time it takes to get inflation out of the system, and puts back that point at which households' incomes are no longer being undermined by rising inflation. ultimately, then, when this is all done and dusted, what we need to address is imbalances. The world got nastily out of balance. Yeah, but we know what caused the crisis. The greed of bankers, reckless financial innovation, sleepy, lax regulators, all the rest of it. We know all that. But also what got us where we are were global imbalances, big imbalances that came back to hurt, that really came back to bite us. We're going to need to make sure these aren't as big in the future. That will mean greater international coordination. It will mean the world sitting down and continuing to fight these crises and sort them out and continuing to cooperate and not retreating into sort of 30s style protectionism. What it's going to mean domestically is that we are all going to have to work out, not just in this economy, but other Western economies as well, how it is we share out a cake that is no longer getting bigger at the sort of rate we are used to it getting bigger. Sharing out a cake that is growing is easy. Sharing out a cake that no longer grows is very tough, and we're already finding it. Compared to some other countries, we are doing nothing in the deficit reduction states. What we're doing is a walk in the park, and yet we moan, we whine, we carry on, we want everybody else's bit cut, but don't touch mine and all the rest of it. That's going to have to stop. We are all going to have to get to grips with the fact that governments in the future will not be able to splash the cash in the way they have in the past. We are going to have to address issues of equality and fairness, how we share a cake that is no longer getting bigger at the rates we used to expect. So hopefully this is the start of the recovery, but when will you be able to say that this is all behind us? I think give or take 10 years. It's all started in 2007. By about 2017, we should have worked down the household debt to a reasonable level. The government should by then be about running a balanced budget. At that point, I think we'll be able to look back on a very tough decade and look forward to a different future. But it will be a future where we're going to have to think much more deeply about how we share our resources. Thank you very much.